Hi, this is Zak Mir with the Bulletin Board Heroes here at Zaks Traders Cafe for Thursday, the 9th of May. And the FTSE is still rising like a homesick angel. It's slightly down on the day, I suppose, at the moment, fractionally. But while we're above the previous target there, 82.30, the top of that December trend channel looking for 8,500, which is not only the upper parallel of that December rising trend channel, but also the top of the rising trend channel from 2007. We do break down below 82.30. Probably the worst we're looking for is 8,100, just below the initial May support for this market. Moving on to the DAX, which is back up at the highs now after spending a month in the wilderness. Here the view is that above the recent broken neckline resistance at 18,200, we can head up to as high as the top of that rising trend channel from October up to 19,250, perhaps as soon as the end of this month. Worst case scenario is we have to test the floor of the channel from October and the 50-day moving average near 18,000, but not expecting that. Onto the Dow, and the Dow has managed to rehabilitate itself, holding the top of that gap there, 38,500, and while we're above that, looking for a retest of the best levels of the year, just below 40,000. If you're a fan of US stocks and hope that and have the view that we're on a new bull run, then 41,200 could be the end of month target, which is the top of that rising trend channel from back in the autumn. We're not expecting anything worse than 38,000 now, which is the floor of that 2023 channel. Moving on to Bitcoin, which has been rather disappointing. Wall of resistance there from that March resistance line, and also the 50-day moving average currently around 65,600. Below that, we have the risk of retesting the initial May support there, 56,600, and perhaps even going down as low as the February resistance, 53,000, which would also maybe hint that we could have a meeting with the 200-day line, just above 50,000. The negative in terms of the RSIs, we've had another RSI 50 or neutral 50 failure, which is or tends to be a leading indicator on the downside. It's not a done deal on that front, but while we're below 65 to 66,000, that's the risk for this market. Moving along to gold, and here sideways, which I suppose is better than just falling straight back down again. 2280 rather, our nominal support area, just above the rising 50-day line. Maybe the market's waiting for that to get through to 2280. If you're looking for the metal rather to push back higher, then the resistance initially is 2360. And not really much point talking about the ongoing rally here unless we break that level relatively soon. RSI on the right side of 50, which is helpful. Moving along to the situation with the small caps, and starting off with Arrow expiration, which I have to say has been rather disappointing given how well the company is doing or has been doing operationally. We've got this wide rising trend channel from back in June last year. And the hope is that at 19 pence, which we're back down again below 20 pence, at 19 pence we found support, and we'll zigzag back up to the top of the range in the upper 20s, perhaps by the end of next month, although it has to be said it's just rather strange that we've stayed in a range rather than breaking through the 30 pence zone. On to Character Group, which had a decent update today. In fact, shares have gapped up after that bear trap we had back in February. Above the floor of the gap there, £202.76. We're looking for the top of the channel there, as high as £3.40 by the end of this month. Ideally, we stay above the top of the gap today at £2.85, ahead of that move to £3.40. Onto a stock which I hardly ever look at, and I don't think anybody else looks at at all, is Calnex, which looks like it's going to break out of a triangle that it's been in since basically last summer. 50-day line there at 59 pence, so we need an end of day or a weekly close above that to get us up to the 200-day line at 80 pence. Perhaps as soon as the end of this month. The reason we're including the stock is because we've gapped up off the low, which can be a decent reversal signal in its own right. So it's a bear trap gap reversal actually after the recent sell-off that we had in April. On to DG Innovate, which has tried to rehabilitate itself in the market by having a fundraise and then announcing there could be another fundraise, but at least here we've got the shares bouncing or bear trap rebound from below the 200-day line, 0.1 pence, and we're actually up on the day after the fundraise, which tends to be a good signal. Break of that red resistance line there from January, you could take the shares up to 0.22 pence as a best case scenario by the end of next month, although at the moment that seems to be, or feels like it is, a long way away. On to Foxtons, where it looks as though the estate agents are doing rather better these days. We've broken through the main 60 pence resistance, heading for the top of that rising trend channel from July last year, as high as 77 pence perhaps by the end of this month, while we're on the right side of 60 pence. The 50-day line also pushing up now, which joins the 200-day line, and that is effectively like a golden cross. On to Kefi, where there's another update today. The company obviously trying to be as positive as possible after that bear trap gap reversal. Now we sort of reiterate our the potential there for hitting 0.8 pence by the end of this month, while we're above the 50-day line, currently around 0.59. Ideally, we stay on the right side of that 200-day line at 0.62. On to Keras, and here we've got a situation where we've had a gap higher, which might be the sign that we're turning around. We already had this in a broadening triangle formation, and we already had bullish divergence noted, so perhaps this is the trigger for the shares to get up to the 3p target we've been looking for while we're above the floor of the gap and 2 pence mid. On to Light Science, which has had a decent RNS today. I think a contract win, rising trend channel there, and gapped up after yesterday's update. I think I looked at the stock yesterday actually, but gapped up after the update yesterday, and looks like it's heading for 4.5 pence. Perhaps as soon as the end of this month, but obviously looking for that to happen at least by the end of next month, while we're above the 2.5 pence area, which is the area of the 50 and 200-day moving averages, which hopefully will have a golden cross very soon. On to Landore, which is also doing well at the moment. Here we had the stock penciled in as a rising trend channel base, and a beautiful U-shaped turnaround there, breaking the high there at 2.8 pence. Our initial target here was around 3.4 pence. We're just short of that at the moment. Above that, looking for the upper parallel of that rising trend channel base, a December resistance line at 4.3 pence by the end of this month. Ideally, we stay above that mid-April peak at 2.75 pence. The other point to note is that we are set to close above that top of that January gap, so it would be a gap close buy signal above 3.1 pence, and maybe that's a stop loss for other people or people to use other than the longer or wider stop loss from April. Next up is a company which likes to keep itself to itself, but the share price seems to be doing well at the moment. Rising trend channel there from November. Looks like we'll get an end of day close above a sharply rising 50-day moving average, which is normally a good technical sign, and looking for this to hit 1.6 pence. Perhaps as soon as the end of this month, but certainly by the end of next month, while we remain above the floor of the channel there, around 1.05 pence. Bit of a pinball price action for Phoenix Copper at the moment, between our old target there, around 13 pence, and falling, well, and also the 200-day moving average at 18.5 pence. Hopefully we'll stay above 13 pence, and while we're above that, looking for another go at breaking through into the 20 plus pence zone. One of the best stocks of the year in terms of rising has been Powerhouse Energy. I covered it over the weekend, or the bank holiday rather, as my top risers of the year to date. Here it looks as though the shares have listened to that and bounced off the floor of the gap again there from back in March around 0.87. Above that, looking rather simply for a retest of the best levels of the year at 1.32 pence approximately by the end of this month. Ideally we stay on the right side of that 50-day line at 0.96. Moving on to the punter's favourite, which is still, well, one of the punter's favourite to be fair, is still Premier African. Here, as we wait for a tsunami of production, we see the shares bumping along the bottom, 0.18 the level, but really want to see this stock get through the 0.2 pence mid to then give it a chance to get back into the mid-20s, which is where it was back in the start, or at the start of April. Ideally, no fresh lows now, given the relative stability that we've had, and obviously haven't had a fundraise for a couple of weeks. Moving on to Petrel, and here you can see that we've got this situation where we're heading, approaching the top of that broadening triangle there from back in November. That is at 3.6 pence, which hopefully we'll get over the next week or two. If you're a fan of the shares and looking for a higher target, then obviously that would be the old 2022 resistance at 4 pence. And ideally we get that by the end of next month or even sooner, while we remain above the recent resistance around the 2.5 pence area, but looking pretty strong there in Petrel, especially given the way that the 50 and 200 day lines are both rising. On to the bear's favourite, which is Tern, which may be not quite such a favourite today, given that the shares are up 13%. We've been stalking this and following it on the basis that we were waiting to see whether Tern would be able to get above its 200-day moving average in a definitive way. It hasn't actually done that properly since back in 2022. In the recent past, every time we're above the 200-day line, it's been a sell point. But in this situation, at least while we're above the 200-day line and without any fundraisers, which tend to creep up at these times, looking for 5 pence, hopefully by the end of this month. Also, we've had a gap close buy signal last week, which helps the cause as well, and a double bounce off the RSI 50 level. So this wasn't Tern, you'd be quite a fan of this stock on a bullish basis. Finishing off with Tertiary, and here you can see that we've got what I call a sideways shuffle above a rising 50-day moving average. That is around 0.008, and above that looking for up to 0.17 pence at the top of that broadening triangle from last summer. If you're cautious, probably either you wait for an end-of-day close above the 200-day line at 10.5 or the recent April resistance. But that rising 50-day line suggesting Tertiary is ready to have a bit of a bounce. That's it for me today. More updates tomorrow.